Been joined by Abneesh Roy, who's the Executive Director of Nuvama Institutional Equities, joining us on the show. Abneesh, good morning and thank you so much for your time. And firstly, on the commodity inflation front, what I can see is that the wheat and the palm oil prices, they have dropped almost 10 to 13% on a quarter-on-quarter basis. The copra prices are down 15% sequentially. Give us a sense that what does it mean for the FMCG companies, and with respect to the upcoming earnings, what is that you are building in?
Yeah, thanks and good morning. Yes, you're absolutely right. The falling agri-commodity cost is a clear positive for many of the food companies in Q1. For the home and personal care, our sense is we'll have to wait for Q2 for the margin recovery to start. Palm oil clearly is down sharply from the peak, and this will benefit Bikaji, Nestle, Britannia, and other snacks companies. Even ITC Foods will benefit, but ITC Foods will have a lot of compression in margins in the stationary education part of the segment, which they report as part of the FMCG. In terms of the copra, unfortunately, we have not seen much of correction from an average level. So Q4 to Q1, in fact, copra is still up, and on a YOY basis, it is up almost 50%. But yes, we do expect that at some stage, even in copra, the correction should start. Coming to a question, pricing, see, consumer companies pass on the price inflation to the end customer eventually. There can be 1 or 2 quarters of lag. If you see long term, FMCG companies have taken 2 to 3% price hike annually on a long term basis. So FY26, we see that a lot of the macro is turning favorable, which you also highlighted. Lower food inflation, lower overall inflation. We have seen interest rate cuts also happen, which is also quite positive from an overall consumption perspective, because the EMI going down. We have also seen tax holidays, tax being lower for the salaried in this budget that was announced. So that also is positive for overall consumption. Urban demand is still a challenge, but our sense worst is behind, and rural gradual recovery. We have seen monsoon also go pan out to India almost 9 days in advance. So we expect a good monsoon. Of course, spatial distribution very important. We note that, but overall sentiment should be quite positive in rural. Urban still a challenge. So currently our topics are Britannia, Bikaji, Marico, Nestle, etc. In discretionary, we like Berger Paints and United Breweries. Those will be our topics.
That's interesting, given that JSW Paints has just acquired one asset, Birla's aggressive, Asian Paints is trying to get the mojo back. Why do you like Berger Paints in a space where competition is only intense?
Yeah, very good question. So 4 or 5 key reasons. One, if you see even the last few quarters where I think the Birla Opus very strong impact was there, urban slowdown was there. Berger Paint has been reporting 6-7% volume growth in many quarters, and we expect that even in Q1 and going ahead, that should be broadly maintained, and in the H2 we expect that to accelerate. So JSW, frankly speaking, just replaces the promoter from a MNC company to an Indian-led company. So yes, on an overall level, JSW's own paint market share and Axo market share slight increment is there, but I don't think that is meaningful enough to really impact pricing, marketing, etc. Birla Opus also, our sense is now it is kind of plateauing on that 300-350 crore kind of a monthly run rate. So we see that overall Kansai's market share, medium long term, that remains a question mark. So how we see is Asian and Berger will continue to dominate and will come back strongly once the urban growth comes back. Berger anyway doing well. As I said, even in Q1, I do expect Berger to have 6 to 7% YOY volume growth, which is not a bad number, and H2 even higher. Second is, of course, in terms of Kansai's market share, our sense is Birla, JSW, etc. eventually will take some market share from Kansai. There is a 25% market share with unorganized. So a lot of the urban slowdown is impacting even Colgate, Unilever. So the investors' perception is that most of the slowdown in Asian is because of Birla Opus. Our sense is most of the slowdown is because of the very high urban slowdown which we are seeing, and Asian Paint has got 70-80% market share in the big towns. Overall market share around 50%, but in big cities, Asian Paint has a very, very high dominance, and urban slowdown is impacting all forms of consumption, even paint. So that is something which will reverse in gradually. our sense is worst of the paint demand is behind us as an industry. Now it is seeing growth versus decline in the second half last year.
Right. But what about, some of the seasonality factors? The fact that there has been an early monsoon, it's already spread across the country. Where do you think, the beneficiaries from this, Abneesh, would actually come in?
Yeah, in fact, that's a good question. In fact, there will be more negative rather than positive in Q1 because of early monsoon. So what will happen? Summer demand will be clearly weak. So we expect carbonated drinks. So Varun Beverages, we expect minus 4% volume YOY for the India part of the business. Even for Dabur, the glucose business and fruit juice business should be weak, and some weakness will also be there for Tata Consumers, Marico business versus initial expectation. United Breweries, beer volumes also. We were earlier expecting stronger volumes. Now we are expecting more like a 6 to 7% YOY volume growth in Q1. So yeah, summer has been weak. That impacts many companies. From a beneficiary perspective, frankly speaking, we are positive on Bikaji Foods, Britannia, Marico. In most of these companies, we expect good volume growth. Bikaji, we expect 8% volume growth. Marico, we expect 7% volume growth in Q1 for the India part of the business. Britannia also, we expect 9% plus sales growth. So these are the companies which are doing well. Is it because of summer being less benign? I don't think so. These categories don't benefit because of that. So weak summer has been a negative rather than a positive for the sector overall.
Like Bikaji and Britannia, I mean, they both are complete different interplays, right? Britannia is a play on Britannia clearly is a play on company getting better. The bakery and they are into bakery, and I think what's the other category you call them? One is bakery, and the second
cheese. They've got cheese.
Yeah, so baking,
dairy.
Yeah, dairy and bakery. That's the word, dairy and bakery. Thank you. So the dairy and bakery category is moving higher. What is the story in Bikaji and Britannia, and why do you explicitly like them?
Yeah, Bikaji, if you see, before the December quarter last year, they were seeing very strong revenue, volume growth, and EBITDA growth. Palm oil completely changed that. If you remember, in December quarter, suddenly all food companies, all soap companies suddenly saw severe margin squeeze, which also impacted the grammage tonnage growth because the discounts and promotions were reversed. Because palm oil went up almost 30-40% within a space of 2 months. Now, good thing is government has also reduced the import duty on edible oils from 20% to 10%. And palm oil also in dollar terms has come off sharply. So these two things are really positive for Bikaji on the raw material side because palm oil is 25-30% of the raw material. This also helps the volume growth because again promotions will gradually come back. So we expect 8% volume growth for Bikaji, which in the current slowdown is a good number. In the core part of Bikaji, it will be 6 to 7% volume growth. And if you see in terms of market share, in only 3 states they have a strong market share. In rest of the states, South India and large parts of the Central India also, they have the opportunity to take the market share higher. They're also going into other restaurant business, etc. Just like Haldiram's has a huge business in the QSR retail restaurant business. Same way, Bikaji is testing waters there. They had also done 2 acquisitions, small acquisitions in the frozen food and again in the high-end bakery. They are also giving them more headroom and more icing on the cake to grow. So overall, Bikaji remains a good play on the overall the change from unorganized snacks towards the organized snacks. So we expect Bikaji to remain on the top tier growth, volume growth. Going ahead also, Q1, of course, they will have 8% volume growth, 12-13% revenue growth. And gross margins are almost normal, back to the pre-December quarter. So that is something which will continue for the next 1 year. Good gross margin, good EBITDA growth for the company.
The other space that is getting very competitive is actually the beverage industry. With the foray of Campa Cola, some reports do suggest that they have already achieved a double-digit market share in key regions within India. If you can help us with the latest, that what you are picking up with respect to the market share, how is it panning out, and going ahead maybe in a couple of years, how do you see the industry shaping up?
Yeah, good question. So Varun Beverage has done quite well as a company last 3-4 years. In this quarter, we expect, as I said, because of the severe heat wave not happening, the summer was quite weak. We expect -4 YOY volumes in India part of the business. Coming to Campa, yes, they are putting in 8,000 crore capex in the overall beverage industry, putting up 10, 12 new factories in Bihar. They are putting up a 1,000 crore factory in Assam. Also, already they are putting up huge plans, and we expect that this is a large industry, right? This is almost 50, 60,000 crore industry with two large players. Is there a space for a good third player? We see that happening over the next 2 to 3 years. What works for Campa is clearly the 10%, the 10 rupee pricing is something which is working. They're offering almost 30% trade margin overall versus much lower for the incumbents. Third is, of course, at a 30 rupee price point, the energy can, there is no other real competition at the 30 rupee price point can energy drink. So that again is something which is working well. Currently, Campa's issue is the supply chain is quite weak. You will see that in many places it is not available. But that is how FMCG industry is. You take time to really put up the manufacturing and distribution. But we see that Reliance will focus in few FMCG, and this is a large industry with good gross margin, good EBITDA margin. There is a space for the number 3 player. So we see that medium long term, the disruption in the beverage industry will continue. Of course, next 1 or 2 quarters, overall industry could see a slightly slower demand, because even next quarter, the September quarter, if the monsoon is good, again, the demand scenario will not be favorable, right? Which means that high rains, lower temperature, the out of home travel could be weak. So we see that near term, the beverage industry will see disruption and lower demand. So that's why we'll be preferring the food companies like Britannia, Bikaji, we like Marico and Nestle over some of the other names in the space. Varun Beverages, longer term, of course, the rural penetration will continue to expand. Longer term is a positive. Near term, I think the growth numbers will be a bit muted.
So good having you on the show and dissecting and getting your insights on which way the FMCG pack is headed.
Thank you.
Okay, let's tell you what else has been making headlines. And in a razor-thin vote, the US Senate has advanced Trump's massive tax cut and spending plan despite a report